Are these high interest rates killing your dream of home ownership? Well, guys, today we're going to be going over 4 ways to combat this that we're seeing buyers use in this market. As always, my name is Tim Petitti. I am your local real estate agent here in Brevard, Florida. Definitely make sure to hit that subscribe button if you want to see more content in regards to that. And let's not waste any more time and jump into this. Before we jump into it, it's going to be important for us to have our baseline example of the home we're looking at to show the real effects of this. So what we're looking at is a home that's $350,000. This is going to be pretty close to your average price in Brevard, Florida. A down payment with that of $14,000. This is going to be about 4%. This is going to be, your FHA loan. And then jumping over to the right, it's going to show an interest rate of 7%. That's about where we are today. Of course, depending on your credit, your DTI, all of those fun things, this can be less or it could be more. And then your monthly homeowner's insurance of $160. This is going to put you around $2,000 a year. That's what we're seeing on average here in Florida. And then finally at the bottom, we're only putting 4% down. So that does mean that you're going to have a PMI. That PMI is on default of 140. We're going to leave all the default settings because we don't really need to change all that to show the impact that this will have. So that will put your monthly payment estimate at $28.56. So that is just if you did a normal FHA loan at 7%, that is where you're going to be sitting. What are some ways that we can combat this to help you save money? Well, number one is just going to be a simple rate buy down. Now you can do a rate buy down with almost any lender. The costs associated with it are going to be different, but with a rate buy down, you can tend to buy it down by a quarter per buy down. So to give you guys an example, Space Coast Credit Union will let you buy down your rate by a quarter and it costs 1% of the loan. So let's come down here and drop this 7% to a 6.75%, and that drops your payment by about $56. Now, you have to decide, is that worth a 1% payment? In a lot of cases, that break-even point is going to show that it's not, because you're going to have opportunities to refi in that break-even time period, which means you could have saved that money. But what we are seeing in our market is you can find sellers that are willing to pay for this. If you go on your local MLS, if you speak to your realtor, there are homes that have been sitting on the market 60, 80, 90, 100 plus days with motivated sellers. They are willing to do just about anything to sell that house. And if they were willing to give you the incentive to buy it down some more, you could go down to 6.5. And that is going to drop your payment to $27.45. So that's about $100 over the lifetime of the loan. Now, if you refinance because rates go lower, of course, that is money lost. But again, in this market, we are seeing that sellers in certain situations, and depending on their motivation, are willing to pay this for you. So overall, this is going to save you about $1,200 a year, which is going to be $36,000 over the lifetime of the loan. Now, are you going to be at that rate or in that house for 30 years? Statistically, the answer to that is going to be no. But to save $1,200 a year for something you don't have to pay for in every case is definitely a win, and it can help you afford the home. The second one is going to be a 2-1 buy down, or you could even see a 3-2-1 buy down. As you guys can see on the screen right now, this is a perfect example. DR Horton offers this, so it's already a seller willing to give you these incentives. The first year is going to be a 3.5. The second year is going to be a 4.5. And then that third year is going to be a 5.5. That's going to be the third year all the way up to year 30, even that. So to put that in perspective, guys, I went ahead and put all of these settings back to normal. We're back at 7%. Let's say that first year is 3.5. So we're at 28.56 right now. That 3.5% gets you all the way down to 21.30. This is going to be more than a $700 saving to your monthly payment. And this is going to save you about $8,000, over $8,000 actually. Imagine where you could put that money, and just imagine how much more you could afford if you're saving $700 a month off of that first month. And if we do see rates go down after that first year, or maybe even the second year, you ended up saving a lot of money. Let's go ahead and plug it in for 4.5. So we're at 2130 right now. That 4.5 puts us at 2323. So you're still saving about $500, which is going to be over $6,000 in savings for that second year. So right there, you saved about $15,000. It puts your home affordability in a really good spot for those 2 years. And of course, after those 2 years, you're probably hoping you can refinance. You can do this same thing with homes that are resale. This does not just have to be new construction, does not just have to be D.R. Horton. There are lenders that will offer these 2-1 buydowns or 3-2-1 buydowns to allow you to save money up front and refinance in the future. Now, of course, you run the risk of, can you refinance in the future? What if rates don't drop? That is always a possibility. The last time that the Fed talked, there's no indication that we are going to be seeing rising rates unless something dramatic changes in our market. Always a possibility and a risk you need to calculate. But you should be comfortable with that year 3 through 30 rate, just knowing that you're saving money up front. For the third one, we're going to be talking about the scary, scary ARM.
No! God, please, no! No!
Yes, I know the ARM can be scary because of what happened during the housing crash, but this was the time when ARMs were very unregulated. You didn't have to put a lot of equity down or no equity down, and they weren't capped. Your ARMs in today's market are going to be capped. I believe, again, Space Coast Credit Union, for example, they cap theirs at 4 points. Now, right now, their 5-year ARM is at 5.6. Now, the caveat with this is you do have to be able to qualify for a conventional loan, and you have to put a minimum down of 5%. So that drops you down to $25.28. That saves you about $300 a month. And again, that is going to be for 5 years. After those 5 years, it is going to reset to whatever the rate is. So if it is higher, you run the risk of your rate going up. But over that time, you should have saved over $18,000, which puts you in a great spot. Now, also in that time, let's say the rate goes under 5.62, you could always refinance to get that lower rate. Now, the ARM inherently does have more risk than these other options that are 30-year fixed. The last one I say for last is somewhat the most obvious, but also the most unrealistic for a lot of people in today's market. This is just going to be, let's say you, instead of putting that 5% down, you're going to be putting 20% down to get rid of your PMI insurance. As you guys can see, that PMI insurance down below fell. So you're no longer paying that $140 a month, on top of the fact your monthly payment has dropped down to $23.44. So you're saving a significant amount of money in your monthly payment, but you're also saving that $140 that was going to your PMI insurance. Of course, this is probably the safest option, but again, it's probably the most unrealistic for a lot of people in this market. Home prices keep going up, so that 20% is $70,000 in today's market, and who knows where it's going to be in tomorrow's market. It could be 80, 90, 100,000. I hope you guys found this video to be helpful. Again, there's just different ways you can go about it in this market. You don't just have to do the traditional take whatever the lender gives you. There are ways to save money, and there's plenty of other ways to get you in a home that you want to be in for the price you want to be in it for. If you guys have any questions or thoughts or would like to speak to a lender about some of your options, let me know down below. I can get you connected. And I'll see you all in the next one.